Happy Monday. Welcome back to the Cosasverdes show, where we cover Bitcoin and altcoin price action to help you have a more profitable crypto journey. My last Saturday's video anticipated a move up. I gave 3 specific price paths that looks like this, and Bitcoin right now is in that blue zone. It's following almost perfectly that blue price path. However, here's the question, that the main question we're going to address in this video. Was that it? Thus, the blue price path will reign supreme? Or will there be some strength as the 1 hour and other small time frame oscillate down? Will there be strength found? And then the yellow price path ends up happening, in which Bitcoin could pump up to 34,850 or so. I think it would be just shy of 35K. That's what we're going to address, because either could really happen. And I'm going to give you a super specific tool that if Bitcoin crosses this, then the other one becomes more probable. But as of now, the blue price path is looking more probable to me, but that probability could easily flip. And I'm going to give you such a simple tool that you can put on your chart, and I will show you how to do it, that you can put on your chart to determine, hey, shit, this is actually now more probable to go up. And at the end of the video, I'm going to give you a bonus. There's a nasty fake out possibility because we have a CME gap. Volatility is expanding up. When volatility expands up and keeps going up, price doesn't have to go one direction. It can go both ways. Not some type of bisexual pun or anything, but it can go both ways. Price doesn't have to go expand in one direction. And there have been instances where that has happened. And because we have a glaring CME gap in light of a move up, it is totally possible we get a nasty quick move down before an even more aggressive move up, and then to be followed by a move down. I'm going to show you what that looks like so you can at least prepare. I wouldn't call that the most probable scenario, but it's probably the 4th or 5th most likely, so you need to at least be aware of it. And the beginning of the analysis, we're going to focus on the top 2 most important things to be focused on. I'm going to give you the exact tool to determine when the probabilities flip. Are you ready? Let's get it. So I posted this on Twitter from my Saturday video, and again, my Twitter is at Cosasverdes with the number 2 after it. And you can see here from this structure in late May, I had a box, and the blue price path wicked above the box specifically. Yeah, just wicked above the box. We go to price now, and what happened? It wicked above the box. See that? It was a pretty easy guess, but here's the hard part. Will this convert into the yellow price path? It's totally on the table, but it's only and you can't know. You don't know. You only know when the short-term timeframes or the short and mid-term timeframes are suggesting one over the other. And I want to show you that right now, traditional market short-term timeframes are suggesting that blue will happen, that was it. But again, they could change so quickly, and I'm going to show you exactly what to put on your chart. I promise you, it's going to be real easy. Exactly what to put on your chart, so you can tell, shit, the probability's flipped. Okay, maybe I should be long right now. And the probabilities could flip a few times. Like, things could go sideways where the probabilities just keep flipping, right? And it's just like, what the hell? Pick a direction. But I'm going to give you the exact tool. Are you ready? All right, let's look at it. I would go to this ticker right here. Can you see the ticker? NQ1 exclamation. It is NASDAQ futures, essentially, and it trades 23 hours a day, 5 days a week. It closes on Friday evenings. And it takes a break, I think, at about 5 p.m. or 6 p.m. New York time. About 5:30 p.m. New York time, Monday through, but only for an hour. It takes an hour break, so it trades. So it's a good chart to be looking at, right, through the week, particularly, because it stops moving on Friday evening, obviously. Okay, here's what I would put on my chart. I would get rid of this rectangle, get rid of this rectangle. I'm going to keep, so these orange lines are my alerts, okay? So I know when I need to stare at price because I'm in positions, and I haven't had to look at price in a while since that wick up. But anyway, so you can ignore those orange lines. I will make this here, okay. Notice on this ticker, well, first off, Bitcoin follows this chart very well. It's almost too heavily correlated, it's stupid. This is NASDAQ. Bitcoin moves with NASDAQ, the polar opposite of the intent of Bitcoin. It was supposed to be like a hedge against risky assets, but right now it's trading exactly like a risky asset. So it's essentially the algorithms and the big money moving this, and big stocks like Apple and Amazon are moving Bitcoin. It's the same programs, the same buy and sell triggers, right? Okay, even down to like 1 minute and 5 minute candle, I promise you it's true. All right, as of now, that could change in a year, but it's not changing anytime soon. With that idea, check this out. I would use what's called the MTF EMA, which is over here. See that? That's my indicator I'm using. And I would use it as the 1 hour 200 EMA, which is the daily 10 EMA. It's the same line. Just use the 1 hour 200. You don't have to make it orange like me. You can make it rainbow color or whatever the heck you want. That's tool number one. Again, I'm going to show you how to determine which one's more probable, blue or yellow. Blue or yellow. This is the tool to determine when the probabilities flip. It's going to be very helpful. That's tool number one. You only need one more tool. The second one is an EMA fill on the 15-minute chart specifically. So the indicator is called EMA fill. You would search for indicators and click that, okay? And then when you click it, it'll show up here. You click the gear, and I have yellow and blue for these top two, and then the fill color, if the small EMA is is bullish and above the slower one, then it's green. It fills it with green color, and when it's bearish, it's red. So that's what these four colors are: the color of the line itself and the color of the gap between the two lines. Okay, I would recommend using the 15-minute chart. Probably not the 30. Probably, I think it's the 30 could work too, but let's go with the 15. And we still have on the daily 10 here, even though I'm on the 15-minute chart. See that? It's the same thing. It hasn't moved. All right. When this ticker, the price or whatever you call it, the value of this, if it's under that EMA fill, then the blue is more likely to happen, meaning that's it. It's heading down from here. Does that make sense? So right now, NASDAQ is under that. Therefore, Bitcoin, in this analysis, is more likely to play out the blue. Could that change? Hell yeah. One massive buy of this, it could change it in a heartbeat. However, I would more wait for it to get above and use that as support, as opposed to just a wick above like there. Let's zoom way in. Like getting above doesn't flip the probabilities instantly. It's actually got to do something more like this. It's got to get above it and use it as support. And then after it uses that as support, it'll probably flip green. So right as it's flipping green and it uses that support, then I would say the probabilities flip. Then yellow becomes more the yellow price path here up to 34,800 or so, which is a wick above the weekly 10 EMA, becomes more probable. So we can use, so you can see here is I'm marrying or like playing Cupid with different time frames. Right? I'm using the 15-minute time frame to give me the lead or to front run a signal, a precursor to something more like the 4-hour or the daily chart or even the weekly candle, if this weekly candle is going to stay big and green, right? But as of now, this is suggesting that I just showed you, it's actually going to shrink and maybe even turn red. That's what it may, but shrink in green. It might not flip all the way red, because that's a pretty big move down, but it would flip. It would be red the next week if that were to all happen, most likely. But anyway, so this 15-minute chart with only two tools can help you understand how the small-term timeframes right now are so integral with the larger play that they're essentially, I wouldn't say dictate, but they are going to give you pretty damn good probabilities of which one is going to play out. And right now, it looks like Bitcoin will not make a higher local high as of now, and it won't get back over 31.7. And it's going to pull back from here, at least, somewhere to this next horizontal, which is closer to 30,700. At least that. And right now, a pullback to 30,700 is the most probable because NASDAQ futures are under that EMA fill on the 15-minute. And the price of this has not gone above and used this as support yet. And until that happens, a pullback to 30,600 or deeper, but at least to there, is most probable. Does that make sense? And those are the tools. And again, it's called the EMA fill. If I click indicators, put EMA fill. If you do this, oh, nope. It actually says this, moving average shaded fill area. So you would type this in, moving average shaded fill area, and it is made by A Ballard 11. And when you find it, you star it first so that when you just click indicators, it's there, right there. See that? Because I started. All right. And once you click it, it'll show up here and you just put inputs. I put 21 and 55 EMAs and then these four colors, and I'm using the 15-minute chart. Make sense? All right. Now, so that's my analysis. As of now, it's more probable that 30,600 is going to be hit, and I showed you the exact thing that has to happen. It's not even on Bitcoin price, right? for those probabilities to flip. Could something weird happen where NASDAQ stays under that EMA fill as Bitcoin is raging up past 30,700? Yes, it's possible. Would that make me put my foot in my mouth? Yeah, it's possible. But I'm claiming, it's my disclaimer. It is possible that happens where my confidence in that signal is ill-founded. It's possible, but I'm pretty damn confident that this is going to be a good signal and they will play together because the correlation is just insane right now. Okay, but however, a disclaimer for your own money. I'm not telling you to click sell short or buy long. You are in control of your own money. That is a disclaimer. Like, the signal could fail, but I strongly anticipate that it doesn't. Hopefully that helps out. Now, that wicked fake out. We have a CME gap down below. I want to show you something that would be totally dirty. It would be kind of hard to trade, at least until it hit the CME gap, and it would just be filthy. It would be like a Greg Maddux pitch when he could throw faster than 82 miles an hour, if you're a baseball fan. Anyway, from the past. Anyway, let's take a look at this. So I'm going to go back to Bitcoin, and I'm going to first label where the CME gap is. And I think it's something like 28.2. Yeah, right here. So it's at 28.820, 28.8. Okay, so right at 28.8. So I'll go back to spot price, which doesn't have gaps on it because it trades 24/7. And I will make a little box at 28.8, something like on the 1 hour chart, 28.8 down here. And I will make that orange. Actually, you know what? I will do it on a clean chart. Pseudo clean. Good. 28.2, 28.8. There we go. All right, and I'll make that orange. Now watch this. Watch how dirty this could get. And fractals are interesting, not because it's going to guarantee that price is going to do this, but it means that you know that Bitcoin price has moved like this before. And if the circumstances present itself and there's opportunity for whales to make money, that increases the chance slightly that it happens again, right? Does that make sense? This is back from October 2019. Just wicked ass nasty stuff. Like, this is honestly one of the nastiest increase of volatility. So you see how volatility increased, right? It increased, went down, it chilled out for a bit, and then went up, and then went down. It went down, up, and down as volatility just went up. But price went down, up, then down. Make sense? All right. Now, put this on current price since the beginning of our move down. Let me take off this EMA. So something to that effect. Bam. All right. Take a look. So this would actually overshoot the gap fill down here and then charge up and blow past. So I have the weekly 10 as the target, right? And that would be something like this. So if it started going up, it would go like this. And on one day, it would blow past and come straight back down to the weekly 10. But just, so it's double dirty, right? Look, it blows past the CME gap, then blows past targets that everybody's looking at. So it's just going to demolish longs, demolish people trying to short around the weekly 10. Like, this is aggressive stuff. This would be nasty. Nasty. Am I guaranteed? So again, this is simply a fractal. And I would put this as fourth or fifth, something weird like this to happen. A CME gap fill, which is a fake out to the downside, then a strong move up, blows past, fake out to the upside, then resumes its mid macro direction of down. But as volatility expands, it goes down, up, down, up, then back down. It goes at 3 directions, not just one. Technically 2 directions in total because there's only up and down and sideways, but So that is what we got for this video. Hopefully it's helpful. And click this video. Let's see if I can point the right way. Damn, I did it wrong again. Click this video if you want tips on how to trade futures better, especially if you're just starting out. And click that video right here if you want to see how I strongly and confidently anticipated a strong move up exactly to this level. My video back from Saturday. You just got Timified worldwide. Peace.